Hello everyone and welcome. It's good to see you all today. My name is Frank Ochoa. I'm also known as Pivot Boss. I am author of the book Secrets of a Pivot Boss. And I'm also the president and founder of Pivot Boss. I want to thank you all for joining me here tonight. I've had lots of great requests here to host an evening webinar here because many of my webinars are usually right after the market closes, and a lot of times a lot of folks are still at the 9 to 5 at that point, or at the job or at the office and can't make it. So I wanted to do something a little later, so I want to say thank you all for making it this evening. Additionally, just really quickly here, I wanted to talk about what we're going to get into today. I don't want to keep you all long. I want to make it quick, to the point, and show you some of the things that we were looking at with regards to why we thought the market could drop on October 1st. And again, while this decline has been significant, it hit the targets that we were talking about last, basically during the monthly market outlook that we had on October 1st. So we'll get into that. Secondly, I want to talk about Swing Trade Pro 2.0. This is the latest course that I put out. I don't put out training very often. I only look to put out training when it's very important in terms of putting out the latest approach to what we're doing, and how we've kind of basically translated what we've done earlier on in some of the earlier training, and how we've kind of pushed that forward and kind of tied it all together for a great training here that has already received incredible reviews so far, and many folks are already coming into it. So I wanted to talk about Swing Trade Pro, and how already, if you had jumped in on that Swing Trade Pro deal 10 days ago or so, you would have been able to identify that move right out of the gate in the Nasdaq and across the market here. And we'll talk about what we did here in the trading room a little bit as well. I'll give you a look behind the scenes at the Swing Trade Pro 2.0 training. So again, if you click on learn more about STP 2.0 here, it takes you to the page here where you can again look at the training and what's there. But this is going to be fantastic here, because we're going to tie it into what's happening in the market now, because that's really why I put this training out. Swing Trade Pro, the original training, was put out perhaps 6 years or plus more ago, and again, it was the first time that I had put out a swing trading course. Most of my stuff was real-time based, but for the most part that was well received by traders all over the world. They loved it so much they wanted a follow-up, but additionally they wanted a follow-up with options as well. And so I did both of those things with this training, and created a solid 5-step swing trading blueprint that anybody can follow. It includes 9 trading blueprints, and one of those blueprints, 2 of them really, came to fruition over the last 8 days here in the market, and we'll talk about that right now. So let's jump into the charts here before we talk a little bit more about Swing Trade Pro later on. I'll tell you a little bit more about what's in the training and the awesome deal that we have for everybody, including the live trading event that we will be holding next week. So let's go ahead and get into the market a little bit. Number one, what I wanted to talk about was the NQ. Every month, what we do is we host a monthly market outlook. And during that monthly market outlook, the goal is to identify what the market might do over the upcoming month, and perhaps even in the months to come. Sometimes there's a seasonal shift there where things can happen on a multiple month basis. And here's the NQ. And you can see this is basically the NQ year to date. And what you'll notice here is that from the beginning of the year, which is basically this line right here, it was early drive hard up, and then price sold off significantly, giving us this large range. Since then, price has pushed through the top of the range, the defense was successful, and then we marched to recent highs. So overall, not a bad move from where we were earlier in the year, but look where we ended up today, right back at 7K, right back at the major pivot where this breakout occurred. Major move. Now again, when we host the monthly market outlook, it's usually after the first trading day of the new month, and that was October 1st this year. And so last Monday, not this previous week but the week before, October 1st, what we were looking for were signs that maybe perhaps the market would drop. And the reason why is because the NQ had shown signs of rejection. And this is where Swing Trade Pro really ties in very, very nicely. And when we hosted this last week, this is the same analysis that I used when I was looking at the market. And I mentioned one thing in particular. Number one, the NQ, the E-mini Nasdaq 100, had rallied above the previous highs, but by the end of the day had rejected those highs, and it occurred right at the 7,700 level. A nice round level. It was prior highs in that zone, and there was a solid rejection. And with Swing Trade Pro, this is what we're looking for. We're looking for several types of major rejection patterns that we can then build a position off of and profit from over the course of anywhere between 1 and 5 days, or 1 and 3 weeks, or even longer. And in this case, for most of the swing trades that I like to take, they're somewhere between 1 and 3 weeks in trade. The best ones are usually somewhere between 5 and 8 days. And this is one of those cases. Now, when we're looking at these rejections, what we're looking for is major signs of rejections, but at the most important edges. A lot of times people latch on to one of these rejection tails, but it's not about the development of that candle. It's more about where it occurs in the price chart, and also the type of reaction or rejection that also accompanies that candlestick formation. So it's not always just the type of shape it is. It's about where it happens and also what type of rejection has occurred. And those things all came together in this case right here. And once that occurred, I gave a very specific zone for a potential entry in the upcoming days. I mentioned that 7,700 would become a very important key level to defend, and even into the 7,680 level, so as low as that point, which is about right here. And I mentioned at that time that that's the zone to watch over the next day or two. Again, this is all happening on this day. This was in the afternoon when we hosted the monthly market outlook, and over the next day and 2 days, that's exactly what happened. Price hit the 7,700 level, but could not hold above that level 2 days running. What eventually occurred was the lows here, 1 day low, 2 day lows, 3 day lows, 4 day lows. All these bulls were defending these lows. They weren't getting paid. The sell stops were below there, and it triggered more sell stops until we got back to value, and then until we got back to the bottom edge of the previous month's range. And so when we talked about last Monday was two things. When you reject up here at 7,700, that was the entry, remember? When you reject here, you're looking for a move to this target here, and that's what I kept pointing to last Monday, 75.45. And if there's a failure to hold that level, then you go to this level here, which is this black line right there, and that was about 7,400. So those are the two downside targets I mentioned last Monday. Again, it reached it by Friday of that week. And then 3 days later here, we're much, much lower. So again, significant rejection, but it's not just about identifying the candlestick. It's not just that. It's about where it happens. It's about how it happens. It's about where we are in the phase of this cycle of the move. And in this case, we had been trending much, much higher, and we were clearly getting, a failure to get paid up here. And that's what happens when this market gets a little heavy. Additionally, there's clear targets, right? So there's, number one, clear idea of rejection. Those are in the blueprints that I have. I offer 9 blueprints in Swing Trade Pro. This is one of them. This is a rejection day blueprint. And there's also the rejection day trade sequence, which is a series of days that allow you to negotiate entries into this trade. But then there was also very clear targets as well. And again, that's exactly the move. Now, whether you traded the NQ outright or whether you used it as a proxy to trade other tech-related instruments or trade volatility or whatever the case is, again, this gave us a clue right away on the first trading day of the new month, of the new week, and of the new quarter. And again, when the entire market got taken by surprise, and then today the bottom falls out, there are a lot of folks that are hurting right now. If you think today, the NQ lost 5% by itself, just today. Just today alone, in addition to what it lost from the top, that's 10%. It's lost 10% over the last week and a half. And by contrast, on many of these days I was actually up because of the hedges that I had put on, and then I was actually up because of some of the sell candidates that I decided to put on as well. For example, instead of selling outright the NQ, one of the things that we latched onto, or I did at least, was the IYT, and I used this one as a proxy as well. So this is the one that I used to hedge against a falling market. And what I did here was look for rejection again. And so we had rejection 2 days in a row, or 2 out of 3 days. Number one was right here, where price rejected multiple day highs and dropped back below. And then we saw another rejection here. And at that point is when I entered my trade. And again, the way I entered that trade allowed me to profit significantly on the way down, and I took profits along the way over the last 2 days. And so again, this is a great way that if you're smelling rejection in the larger time frame of this market, like the NQ was given as signs last Monday, then you can then take protective measures so that you are not part of the crowd that just wakes up the next morning or comes home from work today and says, holy crap, what just happened to my portfolio? Again, there was ways that we could protect against that, and that's exactly what Swing Trade Pro 2.0 does. It allows you to identify those earliest moments where the tide might be changing. It allows you to identify the best areas to enter these zones as well, these markets. Anytime you have significant rejection, there are many different entry levels. There's not just one. There could be 2 or 3 or multiple. And that's exactly what we do with trade sequences. And so what the different blueprints that I provide, there's rejection day blueprint. That's the one that we showed here today in the NQ. And then to piggyback off that, there is a trade sequence. So the rejection day blueprint would be a rejection, and it would be a blueprint of that type of day, the measurements of that day, how, what's going into that day, and where the entry points are for that type of day. And then a sequence, a rejection day trade sequence, would be a collection of days, 1 to 5 days, maybe even more sometimes, a sequence of days where there are numerous areas to enter that trade, defend a trade, add to a trade, and all of those various things. And every single pro trader, every trader that really knows how to negotiate their entries, how to be an active investor in their positions in an active management role, knows how to use this approach. And it's basically an active management approach. It's an idea of understanding all the various entry points, where you can add, where you can defend, and that's what we do with these blueprints, and I make it very, very simple. And I'll give you a look at something here in a little while when we drop into the dashboard. But again, it all starts with rejection in this case, and for the most part, wrong symbol here. That's my toss nomenclature there. Now, it all started with rejection. Now, again, after this major sell-off, this is what we've been talking about this entire time. After this major sell-off, how much lower do we go? And then what happens next? What happens next? And if you've been in the trading room over the last week, again, we talked about the pullback. We positioned ourselves accordingly. I did take some long exposure in here, but rolled out of some of those, and then also there were limited exposure, and again, that's also major focus point in Swing Trade Pro, is learning how to bet accordingly. These markets were overextended. They were at major highs. Clearly, you got to be able to buy pullbacks in these major markets, but one day you're going to get fooled. And again, being able to understand when to leverage, how to leverage, when to be aggressive, when to be conservative, when to be somewhere more in the middle, again, I give you a blueprint for how to identify those opportunities and how to engage them. So right now, what do we do from here? Look at this. Look at this NQ right now. This NQ is significant here because of what it has done. And what you're looking at here is this is composite VWAP for the last 3+ months. It's a quarterly VWAP right now, and it's working on a composite VWAP over the next year. This is the first standard deviation above VWAP, and this is the first standard deviation below VWAP. And so to come down one full standard deviation here across the range and down below it into a market structure area of support tells us that we could be close to a potential snapback type of trade. And if we snap back, we probably snap back to a point of failure from before. Today was an aggressively overextended day. It was it never let up. It gathered itself and then continued even lower. This is a rare day, but when it happens, there is a tendency to have a major reaction back to the upside. It may not happen initially right at the open. What usually tends to happen is if this is the key market structure level, 7K, a nice, beautiful round number. Look at it. Look at all of this, right? It's beautiful. 10% correction off the 77s. What may usually happen is perhaps we drop down hard to open the day, but by the end of the day, we've rallied back up and we're closing back above 7,100. Perhaps we build a little bit and then we bounce back toward 74. That will give us now a key range. That will give us a key range. That's what I've been looking for this entire time, is some solid low to form. We haven't seen it. It's continued to go lower. And so again, you got to continue to let it do its thing until rejection occurs. I think it's getting close to that point in the near term. That's not to say it can't go lower, because this 7K is a very important level, but so is now 74. And so if we do bounce back up here, 74 could become resistance, and it could get stuck here for a while and then open up to the downside even lower if 7K can't hold on the longer term. So again, just on the near term, an overextended move like this tends to have a snapback reaction, especially if there's a rejection of that low tomorrow. So this is the thing to watch for here in overnight trading, pre-market trading, and as we head into the RTH Open tomorrow. Watch for price to drop below 7K. And how does price respond below 7K? Does it come back above it and start to reject the previous session, today's lows? Or do we remain below there? Because that's going to be a big level. Because if it fails to hold 7K, the next market structure level below is here. This is your market structure. It's either trading above it or it's going to trade below it. So this is a big time level right here. And again, wanted to tell you a little bit about that NQ because this is a significant move. We saw it coming. We held the market outlook. I let people know that typically speaking, the last quarter here can have a significant sell-off if August does not have the sell-off. And that's been the trend since the 2000s really. And so I mention it every year that August, we're looking for an August pullback, because if there's a deep August pullback, it can hold the rest of the year into the end of the year. In this case, August did not have a pullback. You can see here it actually closed higher. And so what I usually mention to our traders is that if the August pullback does not occur, then the October pullback is usually much more significant and usually takes out the August low. In that case, this becomes the low to work off of for a late year rally. You've got to think right now that starting off Q3 with this type of pain, you're going to see money managers become active again. You're going to see them try to get back to even and get back up heading into the holidays for a good final quarter. Again, this market's been very bullish. Earnings are coming out here pretty soon, and until we see a fundamental shift in earnings, again, that's going to be the make or break now that interest rates have risen a bit. So again, some things to keep in mind here. But the way that we identify this move is something that happens time and time again. You have to be able to identify those moves. And this is what Swing Trade Pro does. And again, here's the same type of move earlier this year. We had that one set as well. I mentioned that this break right here opens up a move all the way back to this low, and it got very, very close. This is the same type of trade here. And again, this type of sequence, I call it a trade sequence, is marked up in Swing Trade Pro with precise entry points on how to identify that. Same thing with this one, all the various styles. And as soon as this thing finds a rejection low, again, there's going to be perhaps a bounce back up. And again, being able to engage this market with options again is a fantastic way to approach trading, especially in a high volatility environment. And that's what this course teaches as well. So just a fantastic drop, a big move. Right now, if we look at this thing from a weekly chart perspective, you can see we've had a pretty sizable pullback, but you got to think at some point here we may find a low that gives us some sort of key range, and then perhaps price becomes either range bound or slight upward bias if it can continue to hold 7K overall. I would say 7K becomes important because now you're going to start to hear signs of head and shoulder tops. That's what's going to happen now, because you have this shoulder, you have that head looking thing, and so 7K becomes important, especially if it does this, because now if it fails to hold 7K, it goes to this low, and then all of a sudden are we building for some sort of catastrophic event. Again, got to take it a day at a time here, and we'll see how it goes, but 7K could be important. Interesting stuff here. Significant movement. I did want to show Fang right now, the Fang stocks, because again, is the market going to start moving higher? Kind of a shift from growth back to value and those types of things. This is my visual trader map here that I've custom created to show a lot of the groups that I trade and follow. Custom built groups, a lot of fantastic stocks here, but a lot of stocks have gotten hit over the last week to 10 days. Now, if you look at the Fang group here, which is Facebook, Apple, Amazon, Netflix, Google, right here, I wanted to show you something with the long-term value up on the screen here. For example, Apple is right now doing the best of the Fang 5, and you can see right here that this one is pulling back toward an area of support of 215, which is very significant. Again, with this one, I had been long this one, and I got out at 238 right here. Again, because of the signs that we were likely dropping. Over here, we had a minor lower low and rallied to a high. That's a failed high. Do we need to come out here and take out this low now before we snap back up? If we do something like that, check out this blue line right here. You see that blue line? From the beginning of July, that blue line has been straight up at a 45-degree angle. That is composite VWAP, composite volume weighted average price. And that, when it's trending up, is usually an opportunity to buy. It's basically a running value line right there. It just shows you the real-time value of this price for that period of time. And then, again, my pivot boss bands here show you standard deviations below, standard deviations above. And so, again, you can see when a flat VWAP occurs, that area is usually a great opportunity to buy value. Rejections below value offers an opportunity to buy. So if we drop as deep as that level, it could be a fantastic buy. The second thing I'll note about Apple right now is that after this after this sell-off, the next bounce could be a great buy because of the relative performance that we've seen against some of these other stocks. This one has not even broken market structure. Some of these other stocks comparatively look like this today. They're down here somewhere after a major meltdown. That's what the market looks like right now, but Apple does not. And so there's a great market structure level here, great CLVN in terms of the volume node. There's an awesome composite VWAP here. I think if price were to drop down into that level tomorrow, that could be a great buy. You can see my alert right there, just ahead of the level. Call it 213s. So if it hits 213 tomorrow, watch it, or thereabouts, 210 to 213, because that could be the initial zone where rejection may begin to occur. And if rejection occurs there, we could be seeing a bounce right back up to the recent midpoint, maybe even a little bit higher. But again, this one could be headed higher and heading into its earnings date. So keep an eye on Apple. Again, while the market's getting crushed, this one did not get hit too bad in the meantime. Facebook is getting crushed. I still think that this is a dog that has a stigma attached to it. I speak to lots of folks. I hear lots of folks' opinions on it. Clients, I have clients that say, I'd rather you not engage Facebook if you're, you're going to trade and manage money, because a lot of folks really have that. It has a stigma against it, whether they're not happy about all the fake stuff, news and all that on it, or maybe people got it's just a shaming thing on there where people just it makes people feel not happy a lot of times. That's the main thing I hear. I'm not on Facebook, so I don't know, but I see a huge stigma, and it's down. But this is what I've mentioned from the very beginning. When it dropped here on that big gap, I said this one's probably not going to get touched until it gets below 150. And then when it gets to 150, say 140 to 150, that might be the time where finally they start to nibble again, because now it's going to be at major market structure levels. It's going to be at levels not seen in nearly 2 years. And then from there, 140 is just a new high away from a double. And while that double might take a little while, that's something to consider, because if there's a failure to hold or get back above 150 over the longer term, I mean, this thing could continue to melt. So again, this one's not looking good, but it's coming into a zone where I think everyone's going to start finding value in this price in this stock. So again, anything below 150, we're getting closer, because we've seen many times over here where it looked like it was strong, but we kept saying, hey, it's not at 150 yet, so it's not it's not ready. So watching this to see how it approaches that level. And this one does have a downtrending VWAP. You're exactly right. It has a downtrending VWAP here. It has a downward sloping S3, so you don't want to typically jump in front of those types of trains. But if there is a significant rejection here, then a downtrending VWAP can be a great target. Something like this here where it jumps right back up. And so it could be a quick bounce back toward that level whenever a rejection is seen. But again, can't put the cart before the horse right now. Got to let it do its thing. The next one on the list here for some of the big five is Amazon. And now Amazon I'm very surprised about. I'm very surprised with Amazon's sell-off here. I think that Amazon, again, it continues to crush it. They continue to crush it. I don't see this turning into a huge deal where it can't go higher from here. Oh, it popped out of here. Here, let's do that again. But I'm surprised we've dropped as much as we have below value, because this one has not been one that would get below value. So if you see right here, this is value. Pops higher, gets below, pops higher. Here it is again, pops higher. And then it was at value. We were watching it just a couple days ago. I mentioned, hey, it's right at and below value. This could be a great opportunity for a squeeze, and it didn't happen. And bang, that happens. And now it's way below value. And you can see right here, that's your S1 around 1700, and it would be a new low below this low. Does that level spark the bounce back toward 19? So again, got to see how this one responds, but this one took out significant market structure at, call it 1860. And so at a moment here, whenever we find that low, that strong low that it really needs, I think you'll see it bounce back toward 1860, between 1860 and 1900, right? Somewhere in that zone. Now, 1650 is a big time level down here. That's the next major level. If this isn't it, then that one's it. And this is actually a much bigger level when it comes to some of these key levels here. But again, how much more is it going to stretch down before it bounces? So the point is, these Fang stocks are way below value. Way below value. And that's a good thing for some of these larger companies, some of these better producers. This one just continues to crush it on earnings. I'm pretty sure they're going to do their Black Friday thing at some point. It's going to be spectacular. Who knows what's going to happen? I just think that this one's going to continue to do well. And so to get this type of a discount, I think is good. I think it positions folks well for an end-of-year rally. It's just where are we going to find the low? And sometimes trying to predict that can be difficult, but market structure can sometimes give us clues, and we got a couple levels coming up right now very soon. So I think at the very least, and this is part of my base thinking right now, do I think that this is the August sell-off that never happened? Absolutely. Absolutely. This is it. This is definitely it. And this is, again, that's why I'm still hopeful. It looks like doom and gloom right now. It may still have another big wave down tomorrow morning. But I think it's found a pivot high. It's close to finding a pivot low. And the reaction you're going to see that follows will be very, very aggressive. It could even be 1 or 2 day aggressive where we're there again 2 days later, something like that. Again, you never know how fast it can turn around, but it can be quick. So I do think that we are going to get some sort of ricochet, but very similar to the NQ, that once we do ricochet, I think we have a good shot to get in here, but then that could become resistance. But this is a big deal here, because if that's when things get serious. If it can't get back above 1860, 1850, 1900, that's when a failure in market structure becomes a huge deal. Yeah, that's right, Dwayne. I did also want to follow here with Netflix and Google. Netflix has been going sideways. It got hit on earnings here in mid-July. It's mostly sideways here. I think with this one, it's hard to tell right now what's up with this one, but I think, you know, it might still need a little bit lower as well. Again, 300 would take out the recent low. I'm all about taking out recent lows before I buy. Clean out, rinse those lows, show rejection, and then it's a great buy back toward value. But this one's been hurting. So you can see that these Fang stocks haven't been showing a whole lot here recently. They've been getting hurt a little bit. Google here, down big too, and according to value, way, way down. Look, it's almost 3 standard deviations below 3-month VWAP. This is the red alert right there where it gets to that third standard, because normally it doesn't stay 3 standards below for long before it snaps back toward value. So this is going to be important to see if it can find a strong low and ricochet off of it. One last thing here, and then I'm going to jump over to the site. If you look here at my Fang group, and then I drag over this Fang composite, this is a composite of all 5 of those charts. So I've built my own index of the Fang 5, so those 5 Fang stocks. And so if you look at this composite, here's 700 right there. That's a market structure level for these stocks, and we are coming into S1. So this is a composite of Facebook, Apple, Amazon, Netflix, and Google. So basically what I did was I took these 5 stocks and I created one stock chart. And that one right there, again, is a buy opportunity at a market structure level at some point. So again, this stock, we've seen it before, where we were here and here and here, and on a different VWAP measurement, and every time it pulled back to that zone, it was a buy. And now if it gets below value, it could be a huge buy as well. So again, this is a composite of all 5 of those collectively oversold significantly, and now we could be looking at the snapback higher pretty soon. So again, aggressive selling pressure, and we'll see how these continue to follow. But one thing is for sure, when you get this type of selling pressure, it makes for great longer term opportunities. This is an opportunity here with a strong low where you could base off of that low for the next 3 to 6 months depending on the strength. This type of low is something like this or something like this, where if it can find that pivot low, you can ride it higher as a strong pivot. So again, we'll see if that happens. But again, you can definitely see these have certainly sold off significantly, but they're coming into major areas of value. Number one, Apple coming into value itself. This one coming into S1, S3 here, S1, S1, and S3. Incredible. So let's take a look over here. Good question here. Let's talk about that real quick. I wanted to come over here to Swing Trade Pro because this is important. And a good question here, Ken. Do you think the drop today will affect people's view on earnings and earnings outlook? That's a very good question, and I think in this case it is today was, kind of trimming some risk, right? Trimming down positions, and then waiting to see what happens on earnings, because I think overall the earnings has been strong, and that's what's driven this thing higher. And so I think the people's view will be that, or at least I would say, the smart money would say, we expect this to be the same going forward, that hey, this round of earnings should be good as well. However, as soon as those signs start to come in that it's not that, I think they'll be very quick to flip the switch the other way. I've been on the view that earnings will continue to be good, except for in those areas where tariffs are going to impact retail, and we already saw retail really drop off, Target and Ross and some of these others. I nibbled a little bit on some of those and got out of Dodge quickly. But again, so I do think that there's going to be some of those areas that may get impacted, but I think others. So I think right now the general consensus may be, hey, optimistic, but cautiously optimistic unless there's something that proves otherwise. So something to consider there. Good question here. Does Swing Trade Pro 2.0 show you how to set up your studies and charts? So let me first preface this by saying Swing Trade Pro 2.0 is a very slimmed down. It doesn't show. I mean, I'm not. You don't have to have any specific platform for Swing Trade Pro. You don't have to have any specific, charting software. You don't need any specific tools for this one. What I'm showing is pure price action and pure execution and pure risk management, and so it is an approach that anybody can pick up with however they want to approach the market, whether it's a short-term, intraday, day trading, or swing trade, or active investor, or beyond. But what I am going to do, so the course itself doesn't say this is how you should set up your charts. What the course shows is this is a significant rejection. This is what we're looking for. This is how you can identify it. This is how we would look to enter it. This is our entry triggers. This is where we're wrong. This is where we add to positions, those types of things. Additionally, what Swing Trade Pro 2.0 will do is it has a hands-on component where next week we will be in a 5-day live trading event, and that is free with the course as a bonus if you sign up by October 14th, which is Sunday, 4 days, 5 hours, 18 minutes, 29 seconds till then. But that is going to be a hands-on event there where I will answer those types of questions. So if you have Think or Swim, for example, I can show you exactly how I have my charts. Basically, what I use are Pivot Boss indicators that I've used for quite a while, including Pivot Boss pivots. It shows me those major areas that you should watch for rejection or breakout and continuations. Plus, it has built-in extensions. I also use quantified tools that help me quantify things in the market, like expansion and compression. And so again, all of those are available at the site. But I don't really teach those in the course because they're not really pertinent so much. It's more about, this is what we're looking for in terms of price action. Here are the blueprints so I can show you. This is an example of it in a chart, and this is how you would engage it from an entry standpoint, from targets standpoint, from how you would manage your risk, to how you would decide your trade allocation, and all the various components that go into it. So that's really what it's about for the most part. So let's look at this real quickly here. If you come down here, you can see that 10 hours of on-demand training. So number one, as soon as you get into the course here, everything's already there on a dashboard. We'll look at that here in a moment. There's videos that's already ready to go. The PDFs are on every page, and you're ready to rock and roll with the PDFs and the video training right there alongside. It's 10 hours of training, which, depending on your viewpoint, can seem like a lot or it can seem like a little. And for 10 hours of training to include the amount of information that's included in this 5-step blueprint, it is incredible. To be able to, in 10 hours, get that information, I wished I could have. It's almost like Neo from the Matrix. You just download that information into your brain. I wish I could have had it 20 years ago. But again, this is 20 years of research and experience and actively engaging the market. So again, 10 hours to be able to get up to speed. Now that doesn't make you, that won't make you a professional just because you took 10 hours of that training. But what it does do is it gives you a blueprint, a step-by-step approach to engaging the market, from execution to trade sequences to the strategy toolkit. Well, the first one is actually the risk management, to the execution and the documentation, all that. And again, combining it all to give you an approach that you can use, again, regardless of the platform you use. So if you use TradeStation, or if you use Thinkorswim, or if you use NinjaTrader, again, these are just these are concepts and techniques that are just universally applicable to how you engage a market. And so again, I would say that with this approach, the blueprints and the trade sequences are probably going to be the most important, or the ones that are kind of the fun topics that most people might want to engage. I know when I first started learning to trade, I always wanted to know what the next hot setup was, or you know, the hot indicator. And so sometimes trade sequences, that's where you're looking for the opportunity. So it's always looking for the opportunities, the fun part. And so again, there's already been great feedback about those sequences. If you look at the strategies toolkit, this is where you'll find the option strategies that I teach in the course. And so if you haven't traded with options before, then this is a great primer for you, because I'm not someone that's going to teach options like everybody else, with all the Greeks and all the the different shapes and all the various things. I know the information. I've been taught by professional floor traders. I've engaged it. I've traded automation. I do it every day in the market. But again, my goal with everything I do is to simplify the approach, take out all the difficult elements, and then provide an easy approach to engage a market, to make it easily understood by anybody. And so again, with Swing Trade Pro, the strategy toolkit is where you choose your trading approach. How do you want to engage this market? If you're super aggressive and you think, hey, this is really about to bounce right now, it's about to go up, I have to get in. Again, I show you how to be aggressive and how to structure your entry, or how to structure your trade allocation to be aggressive. If you think that this is a good opportunity, but I want to let it prove itself a little bit. Again, there's ways to leverage into those types of trades, and there's ways to use different strategies so that you are risking less as well. So again, many different ways to kind of put together a great approach here with all the different puzzle pieces that we have. And so this is a great 5-step approach that in 10 hours you get a lot out of it. The 135-page PDF that comes with it, again, it's basically the size of a book, and it's packed. It's packed with information. It's got the 9 trading blueprints and 100% money back guarantee. Now, if you take a look here, let's see, does price include your trading room? So the price right now, let's talk about the price. The price right now is a flash sale until Sunday. That's $547. It's regular price $697 for those 10 hours training plus the 5-day event. The 5-day live trading event, again, that's a $695 bonus. It's free. And if you get in by Sunday, that's included. And so again, that's going to be access in the trading room during that week, but it doesn't come with any trading room access beyond that. So that will be trading room access for that week, and the last 2 hours of the day there, 1:30 to 3:30, where we will combine these topics. We'll actively prospect. We'll trade, and it could be a great week next week, right? Because if we're dropping right now and we're about to see that recoil that we might be able to get next week, that again into options expiration, next week is the week to watch in terms of trading. So we're going to be engaging that next week, 1:30 to 3:30 p.m. Central, Monday through Friday. It's a live trading, live application, and then again live teaching of those concepts so that you can answer those questions and get in there. So it's all included right there. Now, if you owned the very first version of Swing Trade Pro, which again, it's almost dating us because the very first version was on DVDs, which some of you still have, and I still have some of those DVDs. And again, that was so well received. For those of you that still have that those DVDs or still have access to Swing Trade Pro, again, I give an upgrade pricing for you as well. So a cheaper price, $447 there. Also, if you are a Masters member, so if you're a member of Pivot Boss Masters, again, all Masters training is free, ongoing. Swing Trade Pro predates Masters. It is the training before Masters, and so it is not included with Masters, but I am offering an even more discount there as well compared to the flash sale. So $447 for Masters members and prior STP owners. So again, $547 for this, $447. No matter what you're paying, this is an incredible deal because, again, I wish I had this when I was 20 years ago starting out. This level of information, if it was available, would have been significant to the learning curve. So no matter where you are in your progression as a trader, whether you're starting out or you're somewhere in the middle, or maybe you've had quite a bit of success but are looking to add value here, this training I think can do a lot for your trading. This is also 100% money back guarantee within 30 days. So you could take the training, you could take the 5-day live trading event, and then you can say, hey, you know what, that wasn't for me, and you get your money back, no questions asked. Now, typically speaking, that never occurs. I've had a moment or two where someone says I wasn't able to attend and maybe next time or something like that, but for the most part, never have I given back any money because folks are very satisfied with the value that's provided in these courses and the training that's here. And this is all here on the dashboard for you to access moving forward, so you'll never lose it. So again, let's take a look at the training dashboard here real quickly, and then I will answer any last questions you have. If you go over here to training, this is where Swing Trade Pro 2.0 is. It pops up the training dashboard. And so this is kind of a look behind the dashboard. You get an intro video here that kind of sets the tone for what you're going to learn, from the risk management section to trade sequences and strategy toolkit and all the rest. And then down here you can see there's all the various steps. So step 1, risk management. Step 2, trade sequences, strategy toolkit, execution, documentation, and then you have the full course PDF here. If you click on a section like, for example, risk management here, it'll take you to a page where, again, it gives you the video that's ready on demand right now, ready to play. It also gives you your PDF right here for that section, and this section also comes with the risk management matrix, which is a spreadsheet to help you define your risk and trade allocation and other various things regarding your account or portfolio. So again, that's how it looks. You click it right here, play it. You can pop this up. The PDF pops up on the side over here, so you can pop that up right there In this section right here, the PDF has 11 slides on that one, and you go down the list here. And again, that's just a quick way to engage the training. You can have the PDF on one screen, you can watch the video on the other, and follow along in your charts. So again, it's all right here, all very quick and succinct. You can have this navigation menu right here to show you where you are. So again, if you wanted to go back to the Swing Trade Pro 2.0 trading, it's all right here. Very quick and easily accessible. And then once we have the live trading event next week, all 5 of those sessions will be recorded and also placed on this dashboard, and so you will see them populated down here as well. So there'll be 5 extra sections down here as well that will coincide with those sessions. So again, all of this training right here, fantastic, right at your fingertips, and again provides those blueprints to all the various rejection signatures that we look for, trade sequences that we look for, and how to engage them. Let's see here. Good question. Let's see. Do you provide any fundamental indicators or let the market alone determine key levels? For example, Netflix spends more than 25% of its net profit before interest or paying down interest on their debt in a rising rate environment seems concerning. That's a very good question with regards to fundamentals. I will say, you know, I've never considered myself a fundamental trader. But when I talk to a lot of traders in the industry, when I speak to a lot of different types of traders, from fund managers or whatever the case may be, they say I have a lot of fundamentals in my approach and my thinking. Now, I don't look at specific balance sheet types of things, but I look at overall performance of companies and products and those types of things. So I do incorporate some bit of fundamentals, but not the type that you would normally associate, like what you're referencing here. Mine is most purely price action, because with price action, oftentimes you can get an early heads up. Again, like we did with the NQ here, where price was, rejecting already. That's a price thing. It's a price action thing, and so a lot of my training has been on price action, has been on data mining, has been on automation, and those types of things. And again, when you see the data for those, it's easy to become a believer. And again, when you see these types of moves, you know what to expect on a normal basis, and that's why I'm excited that perhaps we get that bounce. But again, what you're mentioning though with regards to that fundamental type of thing, there's others that are seeing that data and are putting their money at work because of it. And so if they see something like that, like you did, perhaps they are selling Netflix because of it. And again, self-serving type of bias there. So again, for the most part, this one, this is when fundamentally the earnings came out and it said, hey, it's not as good as we thought. And it hasn't recovered since then. And now we're coming up to the next point in time where we're about to see again, what's earnings going to look like. And this one again has earnings very, very soon coming up here in the next week, I believe, the 16th after the market opens, so the 16th. So that'll be next week. So again, we'll know right away, and we'll be able to talk to that as well in the live trading event. But yeah, this one's been quite a move. I'm not sure it's quite over. Maybe a test at 300 needs to be seen first. All right, well, I want to say thank you all very much for making it out here today. Again, I know your evenings are precious, so thank you so much. If you have any other questions, please let me know, and I will be happy to answer them now, or you can send me an email at frank@pivotboss.com, and I'd love to answer your emails there. I've gotten a huge inflow of emails, and I've been doing my best to go through them. I've been going through them in the mornings, afternoons, and nights. So if I haven't gotten to you yet, I will get to you. Let's see here. Can I use your proprietary indicators with NinjaTrader in the trading room? So I have 4 of my indicators for NinjaTrader. I don't have the pivot-based ones, but I do have 4 indicators available for NinjaTrader, but it's the NinjaTrader 7 version, and that's up at the premium dashboard, which is our dashboard for our trading room members. So that's available for those traders. Let's see, Micron. Yeah, let's look at Micron. Again, if you guys want to and gals want to hang out a little bit longer, I'm more than happy to talk a little bit more shop here. Here's Micron. Now this one, of course, has been in the news a lot lately because it's been very heavy. Lots of short interest. You know, this one right here has had some issues here lately. It's had a downtrending market structure. Every time it pulls back to the pivot range, it has been offered month over month. And if you know my book, Secrets of a Pivot Boss, that's straight from my book. And my, you know, lower value leads to lower trending moves until a change of bias occurs. So I think with this one, it's coming into an area that's very important here. You can see my key level here at about 39. This is the key level that I'm going to be watching for Micron, because that's the last level where this thing really reacted. And so if you look back here, that's the 39 level. Look at it really react here. It reacted here. It reacted there. It broke below it, and then it reacted significantly. And now we're coming into it again. So I think this has a good shot that if it gets below this previous month's low and gets into this area, there could be a bounce that happens here. If that were to happen, you know, price needs to get below this previous low, and then it needs to get back above that low and seal it. And if it can do those things, you might have a bullish divergence on a CLVN, and that could lead to a bounce back up. I would not really think that this thing is getting much above 50 though for right now. In terms of market structure, it may hang between 39 and 50 for a little while. This one's been tough. This one's been tough because I know it's been getting a lot of action. PE is 3, growing at 75%. Strange. PE is for MU, most likely. Yeah, you know, when it comes to those types of things, again, I let the price action tell me sometimes. But again, in the face of a significant sell-off, this one's already gotten beat up anyways, and so it didn't react a whole lot. So maybe this one's ready to turn around because of that. Again, relative performance, right? So that's Micron right there. Let's take a look over here real quickly. I wanted to look at, let's look at Micron over here. Yeah, the 39, that's the CLVN right there, and then there's my key range. Okay, so there's the key range that I use for Micron. This gives us kind of the blueprint of what we look for. That's a major rejection low, a major reaction at the high, and it comes back to the midpoint. That's your key range now. And you can see up here, again, this is what we're looking for. We're looking for rejections at highs, and that's it. This is the absorption. There's your target here. Your next target is that one, 37.52. That's basically this low. And that's the LVN in the chart. That's rejection. This looks like it has to about 37.50. And then we could begin to see some semblance of a bounce, perhaps. So I think that's something to keep in mind right there with regards to Micron. It's coming into a great level of support, and that could be really, really nice. Now we've had some sell candidates that have been working out nicely, but I'm still looking for some of those bounce candidates on the long side, so we'll keep an eye on these. And again, I want to say thank you all very, very much for hanging with me this evening. Again, I know your time is precious. I want to say if you have any other questions regarding Swing Trade Pro 2.0, please let me know. I'll try to get back to your questions as soon as I can. And again, looking forward to next week's live trading event. We'll see how this plays out because, again, this is one of the most significant moves we've seen since the spring, and I think we could get an equally significant move next week if the right things happen. So it should be a fun live trading event. All right, everyone, have a fantastic rest of your evening, and I'll be back at it soon with you all. Take care. See you soon.